Today, we shall be discussing the difference between the management audit and the statutory audit. Management audit, I've already recorded one video, kindly go through it. Management audit is the audit of the functions, performances of the company. Audit of the management policies and procedures and their implementation. And what is statutory audit? Statutory audit is the legally required view of the accuracy of the financial statements of the company or the business. Let us discuss the difference one by one. We begin with the meaning. The first difference lies in the meaning. Management audit is the audit of performance of the functions. Okay. Now, whatever functions the business, the organization is performing in day-to-day routine, how are they getting implemented? How are they different from the target set? Are the policies being properly implemented? This is management audit. The management auditor shall examine the performance of the management. How is the management doing? Amongst the managers, how is the healthy relation? He shall also provide the suggestions for the improvement in the future. How can you improve in implementing these policies and procedures? How can you do better to achieve your predetermined targets? All these suggestions will be provided to you by the management auditor. Whereas in statutory audit, it is the examination of accounts as per the provisions of law. Accordingly, your accounts will be scrutinized. Whether they are accurate, each and every financial record will be examined. The statutory auditor shall report on the financial aspect of the organization. Here in management audit, you don't have anything to do with the financial aspect, right? Here, you are concerned only with the financial aspect of the organization, the profit and loss statement, the financial records, your balance sheets. He shall point out whether the financial statements show a true and fair view of the state of affairs for a particular period. Now see, every business shall be making own records, financial records. Whether these records present a true and fair view, somebody else will come and monitor and give the specification that yes, everything is up to the mark, nothing has been hidden. Okay, this is statutory audit. Management audit and statutory audit differ on the first point from the meaning point of view. Further we move, is it optional or compulsory? Management audit is voluntary and optional. The law, the rule doesn't enforce on you to get the management audit performed. If you want it, go ahead. If you don't want it, don't do it. Okay. So it is a totally voluntary and optional. There is no legal compulsion to conduct management audit. Whereas in the case of statutory audit, it is legally compulsory. You have to go by the rules, the provisions of the law and get it done. It is mandatory, right? Next point, answerability of the auditor. In management audit, the management auditor is answerable or accountable to the management only, right? You will be appointing a management auditor. He will be performing all his functions. He will be doing what he has to do and he will give you the true and justice statement of what can be done and what needs to be done to achieve those targets. So we can say that this management auditor is just accountable to the management only, no one else. But in the case of statutory audit, the statutory auditor is accountable to the shareholders and the authorities under the Act. So this answerability point of view, both of them differ. Next point, the qualification of the auditor. In case of management audit, there is no specific qualification which has been fixed for the appointment. Any person can be a management auditor, need not necessary that he has to be the base of accountancy. No, he can be XYZ, any person whom you think is quite capable of performing the management audit. In case of statutory audit, he must be a qualified chartered accountant, nothing less than that will do. He is to give an independent report on the financial matters. Now see, the statutory auditor, he has to study in detail your balance sheet. So if he is not himself qualified, how will he comment on them? How will he justify the accuracy of your statements? So in this case, there is no specific qualification and here there is a high degree of chartered accountant which is being compulsory for a person to be a statutory auditor. Further, nature of the audit. Management audit is an aid. It's a help to the management. right, in performing of functions, the implementation of policies, okay, and help to increase how the methods and the suggestions and advices how to improve the profitability. So it is a aid or help to the management. And in statutory audit, it is a check on the management, whether the management, the officers, have they prepared the proper records, or they are just hiding it under the table. The profits have been, they have been shown very less just to evade the taxes and all. So it is a check on the management, and here it is a help to the management. Next, time period. Management audit may cover more than financial year, because there is no binding that every financial year you have to conduct management audit. You can get it conducted whenever you want, okay? And the auditor, he may monitor your records for more than one financial year. But in case of statutory audit, it is conducted for a particular accounting period. That's all. The time period is fixed. One assessment year will be judged. That's it. Next time we'll see another time, right? Next, past or future. Management auditor examines critically the past actions and also the future activities of the management. As I told you, that it also has a futuristic approach. It will give you suggestions how you can improve your profitability, how you can increase the healthy environment of the internal organization. All these suggestions will be given to you by the management auditor. The statutory auditor reviews historical records only, right? One assessment year has passed. He will review your balance sheet of that historic records. He has nothing to do with your future. But this person, he will see your past actions, how the policies were implemented, what were the default there, how could they have been done better. So he will be critically examining your past and giving you valuable suggestions for the future as well. And this fellow, statutory auditor, he just reviews what records you have, what financial statements you have made, and he will assess them. That's it. Now, the work. Management auditor's work begins where the work of statutory auditor ends. So, statutory auditor will just check the accuracy and that's it. After that, the management auditor can step in and give you all the valuable suggestions. Here, the work of statutory auditor ends with the reporting on the financial records. Once the records are assessed, he has given his signature. Okay, done. His work is done. Okay, next point. Relatable to the performance. Management audit is concerned with increasing the efficiency and effectiveness of the management. So the auditor will help you increase the implementation of policies in a better way, how to maintain healthy relations between the employees, how to have a better employer-employee relations, how much incentive to be given, whatever to be done to increase the overall performance, right? And here he doesn't relate anything, it does not relate anything to the performance of the management. Their aspects, their work, everything is different. Now, so here we come to the end of the article. I hope I made the things very clear to you. Kindly subscribe to my channel. You can feel free to ask me any doubts in the comment section. Thank you for watching. Stay safe, stay blessed.